Time for our top story of the day. It's that pesky inflation. We got core CPI coming in hotter than expected for the month of February, but easing slightly on a year-over-year basis. Yahoo Finance's Alexandra Canal has the breakdown. Hey, Ali.
Hi, guys. Yeah, so let's start with that headline number. That came in a bit hotter than expected on a month-over-month basis. The headline CPI rose 0.4%, while it also increased 3.2% over the prior year period. Now, that roughly matched economists' expectations, but really that core number, that's what remains sticky. Yes, we had a slight deceleration year over year on core inflation, but both the monthly number and the annual number came in hotter than expected. Why has core remained so hot? It's because of shelter. The shelter index rose 5.7% on an unadjusted annual basis and 0.4% month over month. Now, that is a deceleration from January. That is one good thing. Like I said, sticky shelter inflation largely to blame for that higher core. Now, if we take a look at the headline number, which again came in hotter, that was due to energy prices, largely to blame for that headline increase there. Energy prices have been declining over several months, but in the month of February, gas prices rose, and that is why we saw that energy index go higher there, and that is why headline inflation is a bit higher. But just digging through some rapid reaction here, this report signals that the Fed will probably keep rates higher for longer. Right now, markets are pricing in a June rate cut, roughly 60%, according to the latest data there from the CME Fed Watch tool. So we'll see if that changes throughout the day as investors begin to digest this report. Nearly 100% chance that next week they will not do anything, that rates will remain unchanged. But look, the Fed has said that getting to that 2% inflation target is going to be bumpy. I think this report illustrates that. We're still not there yet. Core remains sticky, headline moving higher. I mean, gas prices for consumers, that's always a top concern there. So overall, you know, I am surprised that we see markets moving higher here in futures. We'll see where we open.
Yeah, Ali, I was just going to jump in with that because taking into account everything that you are saying and then the market's reaction, you kind of have left us scratching our heads over the last 35 minutes or so because, yes, maybe you could argue that some of this had already been priced in to the market and what we had seen just in terms of the downward movement over the last couple of days. But still, though, when you take into account that this print, like you were saying, kind of reaffirms what we have been talking about over the last several days, that maybe this makes it even more likely that the Fed is going to push off that first rate cut, you would think that you would see red across the screen then on the markets.
Yeah, and perhaps it's on no significant shift in some of the probabilities that we've been watching. Right. And so the market doesn't like uncertainty, right? That's the old adage. And so any uncertainty that was spelled out or could have been spelled out that would show inflation is not just sticky, but is once again rearing its head in some of one of the categories, most notably one of the non-core categories here. That's potentially where the markets might have been a little bit shocked. But at the end of the day, I don't think the market is as shocked as it could have or should have been. Yeah. So that signals
leaves June on the table.
Rally on for right now.
And look, I do think Fed Chair Jerome Powell, he's been very cautious in his rhetoric. He said last week, you know, we still need data. We still don't have the confidence. So I think he has really priced in a lot of that, mentality there, that we're going to stay higher for longer until we receive a lot more data that is showing us that we are heading towards that 2% inflation target there. So again, maybe priced in, but we'll see if there's some more volatile market action as we continue the morning.
Absolutely. Ali, thanks so much for breaking this down for us. Appreciate it.